Alright, what's going on, guys? Back at it again for another video. Today we're going to be talking about volume. We finally got to it after all those previous videos. If you don't understand everything just yet, go back, rewatch the videos, take notes, and apply them to the charts themselves. Obviously, it'll probably take longer than just a week for it to really dwell into your brain and be digestible. So give yourself time. Be proud that you made it to this point, and then come back once you feel basically just perfectly fine with everything else, and we can get into the complex stuff of volume. So today's video is going to be it'll probably be pretty short. My guess is like 15 minutes. We're just going to be talking about the very simple parts of volume price analysis. So what is volume? Volume is the number of shares transacted, so buying and selling is volume. Now we can see down here on the bottom left here, here's my volume indicator. It shows me the selling and buying per candle for the time frame. So, quick side note, the indicator that I use for volume is volume pressure by Kakujiki. There it is right there. In case you want to copy that down, I'd suggest writing that down. It's pretty unique username, so it would probably be hard to find. But yeah, volume pressure by Kakujiki. So now on to volume itself. So as you can see, it kind of comes up as like just little bars, like a histogram on the bottom. And the way I like to think of that is imagine it's just like the power level of the candlestick above it. So each volume, imagine this is a volume bar right here. This would correlate to a candlestick. So the basic concept I want to get across today is matching volume to candlesticks. So let's do some quick examples. So if you get this so we can see, first off, you want to be able to establish a relative baseline. Now you can do this with this indicator. You can establish a moving average. I just don't really like to do it because I feel like it's too many things to look at. But you can see the kind of general trend here is something right around there, maybe like slightly lower. Yeah, that's probably the average volume. So you always want to be thinking in your head, where is the average volume? So just as soon as you pop a chart up, okay, draw yourself a line in your head, or you could just throw on the moving average indicator in the settings for the indicator, for the volume pressure indicator, and here, type shit. Then you can make it any type of visualization you want. So do that. So you kind of have this baseline. So anything below that is kind of a little bit weak in volume, and anything above that is kind of strong in volume, you can say. Now that we understand that, we want to develop some ideas here of just correlating volume to candle. So if you get a completely green volume bar, then what would that correlate to? A completely green candle. So there'd be no wicks in the bottom, nothing. It would just be completely a straight up candle. Why? Because there's only buying, so the only place it can go is straight up. When there's buying, it goes up. When there's selling, it goes down. So vice versa quick. If there was completely red selling, then we would expect to get a completely red candle. Simple as that. Why? Because if there's only selling, the only place it can go is down. Very, very simple. So draw those two examples out for yourself, and give you like 5 seconds, or you can pause the video. And now we're just going to be going into matching candles. So you can see we have two volume bars here. One rather large volume bar and one mediocre to small volume bar. Let's imagine this is our baseline here. And so we would expect the correlated candlesticks to look like something like this. You'd have one pretty large red candlestick, and the next candlestick would look something like this. So just get some ideas in your head. Again, write all this stuff down of how the candlesticks of volume would match up to the price action candlesticks. So you're going to want to be matching these and just putting them together. Imagine if you were to imagine if you were taking a quiz in fucking stock trading school, whatever the fuck, and they were to give you a bunch of candles, volume candles on the left hand side here, and they were telling you to match them up with the corresponding candlestick. So again, this should be rather simple. We're just doing some basic matching here. Okay. Again, so which ones would match up to which? I'll give you like 5 seconds. Just pause the video really quick. Figure that out for yourself. And I will draw that now. So the larger green candle would correlate to the larger green volume. The smaller green volume would correlate to the smaller green candle. The largest red volume would correlate to the largest red candle. The smallest red volume would correlate to the smallest red candle. And the average red volume would correlate to the average red candle. So hopefully that makes sense. Just some quick matching of volume to candles. Again, if you didn't get it right, just pause the video, listen to my explanation. You're just matching candle size to the volume size. So there is that. So now that we understand pure candles, so purely buying, purely selling, fully red, fully green, we're going to have to get into some alternative possibilities. So you can get a candle that is going to be half buying and half selling, which you can see down here. Very rarely are they fully green or fully red. There's always going to be a mix when we're looking at this volume pressure indicator. But that gives us an advantage because we can do 2 times the amount of volume price analysis once we really get this down. So we can see a half green candle and a half red candle. So what would that look like? We have a couple possibilities here. So we could get either a candle, what do we got, green right here? Okay. So we could get a candle that ended up green, that started out slightly red, so it has that wick on the bottom. It sold off in the morning, and then it bought back up in the afternoon. Vice versa, we can get a candle that got bought up in the morning, so it had that morning wick, and then it sold off in the afternoon. And lastly, we can get ourselves a flat candlestick where the buyers and sellers were kind of going at it throughout the entire day. So those are your 3 possibilities. That's kind of more so how it always is going to turn out. And if it doesn't look like that, then you will know what to do in probably next video. I can't get into that just yet. But yeah, this is the truth. This is the story of the volume. So you either get option A or possibility A, morning sell-off into afternoon buying. Option B, morning buying into afternoon sell-off, and option C, where they were just buying and selling throughout the entire day and they were constantly battling each other. So with that being said, that's just another example of what can happen if you get unequal volume. Rather than full buying and full selling, you get half buying, half selling. So let's kick this up a notch. And imagine we get a little bit, like a good bit more, 3/4 buying to 1/4 selling. So what could this look like? So what candle are we on here? Red. Okay, so we have a little bit of, actually let's do green first. So imagine we had in the morning a nice strong trend. This was the full, actually let's make this a little bit more understandable. So this was the full candle before the afternoon session. Then the afternoon session kicks in and it comes back a little bit because those sellers came in the afternoon. So we can see here we would have that wick. Price traded up there, but it came back down because the sellers came in the afternoon. Furthermore, what's the other option? Let me drag this down a little bit. Imagine the sellers came in at market open. And this is what the candle looked like right in market open. And you had all this red just right here. And then all the buyers came in for the rest of the day. And what do you know? You get a candle that went straight up for the rest of the afternoon. And this is the candle that you would get from that. Slightly bottom side wick with a nice green day. So just think of the possibilities in your head. Again, it should look pretty similar to this, the volume bar. So if you in your head want to move the selling to the bottom, then you can do that. Or if you want to keep the selling at the top, then you can move the buying to the bottom. And again, it'll just match up with the candle. So hopefully that makes sense. There's just some more options. And again, I'll go over the red candle for you. It's going to look basically the exact same. So are we on red now? No. Okay, well, I'll make it even easier to understand. So imagine in the morning, market open, we get a nice bid. We get this volume right here and we get a bid up. But then once the afternoon session kicks in, the sellers come in. As you can see, the volume is dominated by sellers and we finish the day red. But since we started the day upwards, we're going to have that little wick. Furthermore, the other option is we have sellers throughout the entire day. And then, so our candle's looking like this. But then right before end of day, buyers come in and they bid off the bottom. So we look like this, with a little wick on the bottom. So those are your two options for that. Hopefully that makes sense. And I think that's probably all I'm going to get into. I'm gonna show you a couple candles on the chart itself. Just to give you some examples. I have no idea if this chart is good or not, but I'm sure it will be. Okay. All right. So as we can see here, we started this. I think it's easier to do with the larger candles. Make this a little bit more obvious. I wish this volume. Okay, so as we can see here, this is perfect. We're looking at this one right here. So we must have sold off someone in the morning. We used some of our power, some of our red power. In the morning, we caught a nice sell-off from market open. We traded down to right here. There must have been absolutely no buyers at all. The sellers just came in and bid it straight down. And then, what do you know? The buyers came in in the afternoon or morning, late morning, and they bid it all the way back up to right here to the high of day. And then the sellers came back in and slowly pushed it down a tiny bit. So there's some reasoning behind that candle. As you can see, for these two candles, these larger ones up here, here's the volume that matches to them right there, those two larger volumes. So again, the larger the candle, you would expect the larger the volume. So we can kind of see the big green correlates to the big white, or it would be green if it was normal candlestick. I just have it color changed. So that checks out, and you have the small red, which would be the top, and the bottom wicks, which also checks out. This next one goes perfectly off of what I was just showing you. So we can see here, we call it a nice sell-off the entire day. Nice sell-off the entire day. And then in the afternoon, we got those little bit of green buyers. You can see they got that little bottom wick all bought up. And we ended the day up just a little bit higher. So just kind of matching the candlesticks to the volume. You're just putting it back and forth, trying to figure out the story. And yeah. You can see when you get half buyers, half sellers, you kind of get these sideways sandwich candles there. Doji, if you were to say. And so, yeah, just another example. There you go. So hopefully that makes sense. Here's another example. Big red for the candle volume. Get that huge wick, sell off. And we have a little bit of green. And as you can see right here. So price must have traded up really early in the morning. There was absolutely no sellers at all. And then the sellers came in and dominated the session while the buyers held this level right here. So that's how you figure out the basic idea of comparing the volume candles to the candlesticks themselves. Again, you're just trying to compare and contrast, match your options, figure out the story, and just figuring out what a true candle would look like, what the candles would look like. Next time we talk about this, we're going to be talking a little bit about anomalies. So when the candles don't match up. So say you get, as you can see here, I mean, I told you a heck ton of volume is going to create a big old candle. As you can see here, we get a big old volume, but we get a little candle. So we'll talk about what that means and how to use that to our advantage in the next video. But as for now, just work on matching the correct candles to their volume, as that is honestly almost more important. And yeah, in the next one, we'll get into solving the crime scene, finding the liars in the volume, who's lying, who's telling the truth, and what that means to us for our story and the story of price action and which the trade is going to go. So yeah, hopefully everything was pretty digestible today. Again, I suggest taking notes, going back, figuring things out for yourself, making your own intuitive understanding. Again, I think I said, like, establish your own 5% understanding in your head and just follow 95% of what I do. So don't forget that part. Establish your own reasoning in your head. Develop your own story and connections, and it'll make it a lot simpler. And yeah, hopefully you're all having a good week, and I will catch y'all in the next video. Peace.